hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning and the cues coming out of global markets are fairly supportive. SGX Nifty hinting at an uptick of 50 points or thereabouts. Looks like the Indian markets are set to, have a brush with a record high once again. I'm talking about the Nifty specifically here. So we'll have to see how that pans out. Of course, over the next 30 minutes, we'll be talking about, the investment themes to look at this juncture. And we'll also be talking about all the stocks and news, and we will be also addressing all your stock-related queries by our technical expert on the show. So if you have any, send them in to us as usual on our YouTube feed and we'll have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Tech-fueled rally on Wall Street sees the Nasdaq reverse Monday's losses. The index is preparing to close out its best first half in 40 years. Meanwhile, Dow gains for the first time in 7 sessions, but US futures are trending lower. Asian markets mixed, while the SGX Nifty, as I mentioned, is indicating a higher start for the Indian market. Brent crude slips over 2% to around $72 a barrel amid expectations of further rate hikes by global central banks. Strong US economic data also leads gold lower. The biggest transaction in India's corporate history could become a reality in 2 days. HDFC chairman Deepak Parekh says the merger of HDFC and HDFC Bank may become effective from the 1st of July and expects the HDFC stock to delist on the 13th of July. Well, among other stocks in focus, we will be discussing Gland Pharma, Titagarh Rail and Sapphire Foods as marquee investors pick up stake in the counter. And all eyes on the SEBI board meet today. The Association of Mutual Fund raises issues with the regulator's total expense ratio proposal. Asks SEBI to exclude transaction costs, brokerage and security transaction tax from total expense ratio, citing it could impact the business of mutual fund houses. Well, let's get on board then. Our first guest for today, Hemen Kapadia of KRChoksey Securities, is joining in this morning. Good morning, Hemen. As always, good chatting with you today. Given the fact that the cues are fairly supportive and, we saw a very smart uptick in the second half of the session yesterday. Do you think the Nifty will be making a dash at its all-time high, given the fact that Sensex has achieved that feat, but Nifty, so far hasn't been able to clock that all-time high level of 18,887?
A very good morning to you, Nandita. Thank you for having me on the show. It's always a pleasure. Oh, yes, I think so. Like you said, we seem to be getting ready to make a dash at the all-time high. And if you notice, we've spent last half a dozen weeks or so consolidating. Frankly speaking, if we've looked at the subsequent rise, we've come up from 16,800 to 18,800. That's a 2,000-point rise, Nandita. Honestly speaking, we should have been at 18,100 in terms of a time price correction. Now, we've taken a few weeks, but we haven't gone down that much. So the undercurrent continues to remain solid. And yes, I think that also means we're setting up the stage for an all-time high. Normally, if you see the Bank Nifty sort of, plays in tandem with the Nifty. And now finally, the Bank Nifty has been being corrective or, consolidating for longer than the Nifty. So frankly speaking, now with the Bank Nifty setting the stage for a move, I totally agree with your point of view. He's setting the stage for all-time high in the Nifty also.
All right, gearing up for the all-time high level on the Nifty. Hemen, hang on, we'll come back to you and discuss specific stocks. But let me also bring on board Anil Rego of Right Horizons, who's joining in to talk about the themes that we should be watching out for and what a new investor looking to invest in the markets do at the current juncture. Good morning, Anil. Great to have you on the show. My first question to you is, markets are, of course, rubbing shoulders with record highs. We've seen a dream run since March 28. Do you think it's a good time for a new investor to enter into the markets, given the fact that, valuations, of course, are looking pretty much higher than what they were a few months ago?
Yeah, definitely. I think maybe a few months ago would always have been a better time, but some of this is at hindsight, right? So new investors, maybe end of March, there was sufficient reasons for volatility. You had this whole SVB crisis happening and it was spreading to Europe. Credit Suisse also was under pressure. So in that standpoint, in fact, that's where actually you find bottoms. And for us, like as contrarian investors, maybe, we would come in there. But unfortunately for, a common investor, those are nervous times. And when there's a little bit more stability, is when they sort of tend to enter and they prefer to enter. Now, coming back to your question of should a new investor even look at the markets right now? Again, I'll step back and say, while we see markets at all-time high, you need to keep it from the perspective of this is the same value that we saw in October of 21, right? So it's been a reasonable period of time where the index has actually not broken out. In that period, we saw earnings grow. And to that extent, I would say there's what I would call is a time correction, even if you didn't find the index go to, new highs. So from that perspective, I still think we are early enough. And typically, experience shows that once sometimes the breakout happens, then you may just see a quick spurt and, then further moves happen from there in a larger way. So that's what I think will happen. I don't think it's a really short-term orientation there, and one believes that there's more steam left. So investors who are coming afresh, yes, maybe they can invest, but just be a little cautious because yes, market has already moved some bit. Maybe some of them can do systematic investments or phased investments. Be careful, diversify. Keep a few fundamental, basic investing principles in mind while you invest.
Right, keep the fundamental principles in mind and exercise caution at these levels. But if I were to ask you, which are the themes one should look at now? Should one hunt for value or chase growth at this juncture?
See, India has been always a growth market because it's an emerging economy and there is growth in it. So what I would say is the more difficult one, maybe growth at a price, right? In fact, that's been our philosophy as well. So how do you find companies maybe which are growing well? You see good earnings growth, maybe even a doubling of earnings growth over the next 3 to 5 years, and then you also on the other hand find them say at a discount to the valuation of the sector. I think those are ones which can be emerging leaders, and work hard to try and identify some of them, and those are the things stocks to invest into.
Right. This is a time, Anil, when global economies are actually staring at a recession, and some of them have, in fact, even slipped into one. But, then on the other hand, US tech companies are spending big on generative AI. Do you think this is a good time to play this theme or this revolution, if I may call it so, and take exposure to stocks that are leading this revolution, so to say, the likes of Nvidia, Microsoft, and the likes?
See, I would be a little cautious from a standpoint of two reasons. One is, the Nasdaq was a leader of, say, the last bull run in the US, and that is at a high, a multi-year high. It's gone up many times over. So from that standpoint, I would still be a little more cautious in terms of investing while, we are already in a large market move. Yes, there's been a correction, but history has shown that whenever the turn happens, it's really painful, and the percentages on the negative side are very large. So I'm just saying that there, I'm not so comfortable because there's a very, very large move that has already happened. The second point is about generative AI. I think some of these disruptive technologies, you don't know which way it will go, right? And how quickly, the move is happening, where you could even have new incumbents coming in. You could have, somebody else just come in from under and, make it very different or difficult even for some of the larger companies. Because of the way the disruption is happening. So at this point of time, I would say, yes, maybe invest into the team for a part of it, but don't go overboard.
All right, don't go overboard when it comes to the AI theme. I also want to ask you, if somebody wants to invest a total sum of somewhere around 10 lakh rupees today, how should one go about allocating investments between different asset classes, and what should the ratio be like?
Very difficult to give a generic, view on that because everyone has a different risk profile. So the first part is, to step back and see what is your risk profile and decide on how much of debt and how much of equity, right? Some thumb rules people use based on age, 100 minus your age. If you want to be a little more conservative, maybe, you can do 80 minus your age, etc. But broadly, you have to see what is it that you're comfortable with. And if markets fall, are you comfortable in managing your monthly expenses and everything? You should not suddenly, feel pressured because markets are falling and you don't have liquidity out there. So those keeping in mind, I think, let's say for say a 40-year-old, maybe you can actually look at up to a 60% of equity allocation at this point of time. Be reasonably diversified. If you are a person who knows markets and understand, able to track, then directly invest in stocks. Otherwise, I probably just stay with doing systematic transfers or systematic investments into equities. It could even be systematic transfers on a weekly basis. I would believe it's good to be slightly quicker in deployment right now, but be a little diversified. Again, within say market cap sizes, our view was that and is that we think mid and small caps will do well, in this next maybe year or two. So that is where we think more of the action will come in. Even though there's a little bit of a move, I think small caps still, if I look at long term, valuations, we are still at a discount versus that. We are a little away from even the peak in terms of the small cap index. So that is something which I would do, but keep in mind that it's the most volatile, right? So compared to all. So in this, let's say 60 that you have on the equity side, I would say keep aside maybe 20 or 15, depending on one's risk appetite, to say mid and small caps, and then spread it out over maybe large and some of them also somewhere the mid caps, and play your themes accordingly.
All right, so that's the kind of portfolio mix one should have. With that, Anil, thanks a lot for taking out time and joining in this morning. It was a pleasure speaking to you. Well, on that note, let's go back to Hemen then. Hemen, I want to get in your thoughts on the HDFC group of stocks. Of course, yesterday we saw, the news of the merger date that really pushed the index, higher in the second half of the session. But then we also saw a block deal in HDFC Life, where HDFC has bought shares worth 992 crore rupees or thereabouts. So, what's your outlook on the entire HDFC group shares right now? HDFC Bank, HDFC Life, HDFC AMC. How would you play these stocks?
Frankly speaking, Nandita, if you look at HDFC, over the last HDFC Bank, over the last 20-25 years or something, 20 years or so, now whenever the bank Nifty or the Nifty, the bank stock, private sector banks have moved, it's always been HDFC Bank and Kotak Bank right at the forefront. I think this time, after a long time, that's not happened, but I believe it is playing catch up. So if you're talking about HDFC Bank, Nandita, things are looking good. We've been range bound over here for a long time, but above 1720, I think we should be finally seeing a big breakout coming in. Going back to HDFC Life, I think many of the life insurance companies have posted longer term bottoms. HDFC Life leads the segment, I believe, in the moment. So that is looking good. Thing is, it is moved up for 4 months in a row. So currently slightly overbought. Setup is positive. And HDFC AMC has been underperforming for a long time, Nandita, frankly speaking. We posted a high somewhere in 2019, 20, early 20. And now for the last 3 years almost, we've done nothing. It has put its bad days behind it. A long-term bottom is in place. So HDFC AMC is also looking good. So frankly speaking, the entire HDFC group basket looks like a buy, especially the ones which haven't moved as much as the ones which have moved, Nandita.
Right, that's the view on the HDFC group of stocks. Satya CK had a query on HDFC and HDFC Bank. Hope that answers your query. Let's move on to the brokerage call of the day. Hemen, we always end up talking about Tata Motors, and today we have a positive report by CLSA coming in on Tata Motors. It has a buy rating. Target price has been raised from 640 rupees to 690 rupees per share. CLSA believes that strong execution and prudent cash management across businesses will bode well for the company. In fact, JLR retail volumes have been growing at a very strong pace, and that continues to happen. In fact, it continued to happen in the month of May as well. And it expects the EBIT margins for JLR to hit 6% in the current fiscal itself. And earnings estimate have also been raised by 11 to 18% for FY24, FY25. Given the fact that the stock has seen a very strong up move over the last 6 months and 1 month, but off late, I think over the last 5-day period hasn't really done all that well. But when do you expect, or in fact, do you expect 600 levels to be topped anytime soon, maybe in a couple of weeks?
Absolutely, Nandita. I think you hit the nail on the head. Uh, we've just cooled off a bit, like you said, over the last few trading sessions, but uh, we are in an established short term, medium term, and longer term of trend. And like you mentioned, 600 has been a bugbear of sorts. In 2015, 2016, 600 has been an all-time high, and we've come tantalizing close to that at 585.90. So keeping the setup in mind, yes, we could take a few more days or maybe a week or two more of consolidation. But yes, I think the longer term charts clearly seem to indicate that 600 is going to be under threat sooner than later. And once 600 gets taken out, okay, historically, Nandita, Tata Motors has never closed above 600 on the monthly chart ever. We've overcome that a couple of times, and if I'm not wrong, I think even the weekly charts that has never happened. So one, that would be historic, and secondly, if it would also mean that the all-time high of 606.28 posted in February 15 gets overcome, then it's clear blue skies, no known resistance levels, and then we can expect decent, if not a good move. So setup is good. Some time price consolidation is going on, but above 600, I think it could do quite well, Nandita.
Right, the setup looks positive and it looks like 600 is on the anvil pretty soon for Tata Motors. Let's talk about some of the other stocks that are making headlines this morning. Gland Pharma, US FDA has issued one observation for its Hyderabad unit, and the observation is also fairly procedural in nature. In fact, facility was inspected between 15th to 27th of June. If you look at the stock, I think it has made a very good rebound from its 52-week lows and has managed to clock the 1,000 rupee level. So if somebody would like to enter into this stock, would you advise him to take positions now, given the fact that entire pharma as a basket has started witnessing some bit of buying? Do you think this is best poised in the pharma space right now?
I wouldn't say it's best poised, Nandita, but it is a risk worth taking. From a high of 43.50 in August 21, we've gone down to a low of 861. So it's not even become 1/4; it's become less. Having said that, we saw a huge volume spike in the month of May. I think volumes were highest in listed history, and these are gross volume. These are not delivery markings, but the gross volumes for the month of May are the highest ever in listed history. And now those levels have held. So logic would say, Nandita, that after such huge volume, if those levels hold, that means stronger hands have bought in. Otherwise, we would have sunk lower if weaker hands had got in. So if there is stability at this level after a very big downside on high volume, mechanical indicators getting positive, I would say yes, slowly and steadily it's trying to claw back. So I would say it's a risk worth taking. 861 was the low. I think I would prefer to keep that as a stop loss, but a slow and steady recovery seems to be on the cards.
Right, Gland Pharma is a risk worth taking. Let's take up some viewer queries then. Vedant Chakrabarti has written in, wants to know your thoughts on Trent. Now, this stock has moved up a fair bit. It is in fact knocking at its 52-week highs as well. What would you advise investors to do on this one?
Well, setup is positive. Trent is one of the stocks which has been in a 23-year uptrend and counting. No known levels, I'd say looks good. Buying fresh, I'm not very sure in terms of the risk reward ratio if you would keep a stop loss. So I would say a buy on decline, but the setup remains positive. On any time frame, short, medium, long term, stock is safely ensconced in an uptrend.
Right, that's the view on Trent. I hope that answers your query. Let's take up a query from Rakesh Gupta. Wants to know your thoughts on Inox Wind. Now, this stock was under pressure over the last, this week, over the last 5 sessions, you could say. But yesterday, it staged a very smart rebound, was up somewhere around 3% or thereabouts. What are the kind of levels you'll be watching out for on this one now? Do you think it's time to book profits on every rise?
No, I have a slightly contra view on this one, Nandita. I would say hold. Almost 18 to 20 months of a consolidation. A large range, 73 on the downside, 160 on the upside. And now we're on the verge of taking out 160. If it does that, I think we would be heading towards 210. So I would say hold. Yes, we have moved from 90 to 167. So a bout of consolidation possible, a slightly longer bout of consolidation possible, but unless it's a shorter term view, I believe hold everything on technical parameters seems to suggest that one, it looks set for a further upside despite the run up. And if we take out 160 on the monthly chart, we have a few trading sessions left of the current one, Nandita. We close above 160, doors open for 210.
Right, those are the levels to watch out for, and hold is the call on Inox Wind. I want to take up a query that has come in on BSE. Shashank Sahu has written in, wants to know your thoughts on this stock. Now, yesterday we got, a notification, in fact, a joint statement by NSE and BSE saying that the Nifty Bank future expiry that was planned on Friday by the NSE has been scrapped, and it will happen as usual on Thursdays. Now, I remember when the move was announced by NSE, the stock of BSE had come under a fair bit of pressure. Do you think today we could see a sharp uptick on shares of BSE, given the fact that the bank expiry happens on Friday for BSE, and if NSE would have done that, that would have meant stiff competition and no uptick in volumes?
Absolutely, Nandita. I think it could bounce back. I think if the stock exchanges don't squabble, I think both will benefit. But yeah, I think on that move we saw pressure. So I think we should be seeing positives coming in after this announcement. And the stock seems technically favorably placed, Nandita. So I believe this impediment being cleared, yes, positive price action.
All right, expect positive price action when it comes to BSE. I want to talk about Sapphire Foods. Yesterday we saw a block deal and some marquee names have picked up stake in the company, in the stock rather. SocGen, Goldman Sachs, Nomura are among the marquee investors that have invested. Yesterday it was up somewhere around 1.5%, and if you look at the 52-week highs, it's still somewhere around 150 rupees away. How should one play this counter now?
Currently, the setup is positive, Nandita. We've seen a 5-week consolidation, and the technical indicators seem to be in a mood to support the move. So we're at 1410. A close above 1460 would mean a test of its earlier all-time high. So the setup is positive. I believe a further upside, once we take out 1460, is very much on the cards.
Right. Hemen, sugar stocks have been on an uptrend, amid El Nino fears, and we've seen stocks like Bajaj, Hindustan, Sri Renuka, Balrampur Chini run up quite a bit. We have a query coming in from Abhishek Wagh, wants to know your thoughts on some of these stocks. Which one looks attractive on the charts now?
Normally, if you see, Nandita, it's always Balrampur Chini which has led the move. But this time, I think Balrampur Chini has flattered to deceive. We should have taken off 420 on the weekly charts. Now that has not happened. Well, stocks like these, which are commodity stocks, obviously have a mind of their own. But the technical setup isn't too confidence giving as far as Balrampur Chini is concerned. But the other stocks that you mentioned, Nandita, I think they have a slightly different story to tell. Bajaj Hindustan looks positive. We've seen a rounding bottom on the monthly chart. So the setup seems promising. So it's contra to what the market leader is currently. So yes, if you look at Bajaj Hindustan, that looks better. You have Renuka Sugar in an intermediate downtrend, oversold, downside limited. So I think the overall entire sugar sector is not moving in unison, but Bajaj Hindustan sort of stands out.
All right, Bajaj Hindustan stands out in the sugar space. Hope that answers your query. Hemen, I'm afraid we're running out of time. Won't be able to take up any more queries. But I want to get in your thoughts on LTI Mindtree along with your stock picks. Given the fact that LTI Mindtree is one possible entrant into the Nifty once HDFC delist. This is according to Nuvama, of course. But your thoughts on this stock and of course your stock picks for today as well.
LTI Mindtree is just on the verge of breaking out of a 10-month consolidation phase, Nandita. Okay, we have a holiday curtailed week, we've had settlements and holidays jumping all over the place, but 5046 was crucial, and we are giving a clear close. We've had almost a hit and miss, actual clear close first time since April 22. So yes, LTI Mindtree looks good. a few stocks which I like. The first one is a buy call on City Union Bank, Nandita. Deeply oversold, positive divergence. Mechanical indicators have given a crossover buy. The stock seems set for a bounce. One can buy at 124, stop loss 119, target 134. Slow moving stock, don't expect fireworks immediately. The other stock which looks quite interesting is Granules. Higher tops, higher bottoms, upper the 55-day exponential moving average, Nandita. Oscillator, they've given a crossover buy. Stock looks set for an upside. Even the weekly chart seemed to suggest an upside from here. So one can buy Granules at 295, stop loss 285, target 315. It's a modest target. I believe that would get overshot.
All right, City Union Bank and Granules India, two stock recommendations coming in from Hemen this morning. With that, Hemen, thanks a lot for taking out time and joining in this morning. It was a pleasure speaking to you as always. But before I say goodbye, the all-new Triumph Speed 400 and Scrambler 400 were unveiled in London last evening. In fact, these are the first bikes to be developed by the Bajaj Triumph partnership and will be built by Bajaj Auto in India. The official India launch of these bikes, of course, is slated for the 5th of July. Well, with that, we've come to the end of this edition of Morning Trade. Thanks a lot for watching, but don't go anywhere because coming up next is Opening Bell.